Okay, hi guys. Zaheer Anwari here from on behalf of the Dynamic Trader. Hi, administrator. Can I just get a mic check is all good, I guess. Screen check as well. Yep, sound is okay. Good. And if you don't mind, could I get an idea of how many people are in the room today? I can only see a few people. Excuse me, on the FX Street online panel, but I know there'll be other people joining in from YouTube. While I get those numbers, welcome everyone. I hope you've had a good week. NFP out today. So just to give you a background of myself and how I trade NFP, I've been trading since 2007. I'm a long-term trend trader. So you won't catch me sitting in front of the computer all day looking for small moves. It's not what I'm interested in. What I'm interested in is first of all, identifying where the money is. So it could be foreign exchange, it could be stocks, it could be commodities, and then looking for trends, and then building a portfolio based on the market that I'm in. When it comes to NFP, it's very simple. I don't trade NFP. I think NFP is a time when you should really be thinking about protecting your money. It's a time when brokers will increase their spreads and entice people into making quick money. And it's a time when most private traders get burnt. So for me, it's simply an extended weekend. I don't close my positions. I don't go in flat. I simply leave my positions as they are. I may open compounds. So if I'm already in a currency or a stock, then I may enter compound positions, but I won't enter into new positions that I'm in until NFP has come and gone, and I'll then reassess the situation over the weekend and then look to enter any positions that may have presented themselves. in all honesty, NFP is it's noise in the long-term direction of the trend. It has very, very little impact. It has intraday noise, maybe the odd spike here and there. But if you've got well-placed stop losses, then then you generally don't get stopped out of any positions, and price just corrects and continues in the direction of the trend. Okay, so that's my general approach. It's the approach that I would recommend you all to take, being private traders. I'm assuming that most of you are business owners. You have families, you have children, you have you're in employment, and then alongside that, you're then trying to build a day trading career. It's difficult, it's inconsistent, it's stressful, it's time consuming, and it's just not the way that you want to approach the market. So you want to approach it in a much smarter way. You're working hard enough as it is. To then try and work hard in the markets as well by trying to chase money just becomes very, very difficult. So you want to be smart, work hard in life, command a good salary, save well, do what you need to do, but then leverage that money through the markets, and that's by holding and compounding is the best way. Okay, for the guys that are based here in the UK, just before I get into the charts, I'm doing a free seminar on the 7th of June between 7 to 9 p.m. Here in London. So if you're in the UK, please check out this website, zaheer.live/free seminar, free-seminar to register your spot. I tend to do small group classes, and these get booked out pretty quickly. So if you're here in the UK, then please check that out. If you want to do a paid day of training, ignore this date. This needs to be updated. It's actually the 16th of June. I have to speak to my developers about this. So 16th of June is the next one. Live training, there's £297, and that's for 3 months of training. And of course, if you're not happy, you've got a 30-day money back guarantee on there, which I'm happy to say no one has exercised as yet. If you're abroad, which I know many FX Street viewers are, then you can do the same training online. So by the way, that's zaheer.live/seminar and zaheer.live/apprentice if you want to do the training online. As part of this, you get training in technical analysis from a trend trading perspective. You get access to a community of traders. It's a closed community where we trade foreign exchange, we trade stocks. You'll get access to watch lists, scanned watch lists. You'll get access to software tools. You get weekly videos. live monthly webinars. The next live monthly webinar is actually this Sunday. So the first Sunday of every month, there's a live webinar. So there's just a lot that goes into this. It's a great entry course into moving from day trading to trend trading and really understanding what it takes to be a good trader. I don't think many private traders actually are good traders. Most of them are men, sad to say. And it's not that men don't have the ability to be good traders. It's just down to the approach and the mindset on wanting quick money and instant gratification. It just doesn't work. It's not going to happen. There's no such thing as a get rich quick scheme unless you win the lottery. So you've got to rethink your approach. Okay, if you do have any questions, you can email me on zaheer@zaheeranwari.com. Okay, let's go into the charts. So bear with me a second. I'm just going to switch screens. Okay. Administrator, can you see my charts there? Yeah, okay. Great. Okay, so what you can see here is a typical chart setup of mine. And so as part of the training, the apprentice training, this is the setup that you will also get access to. So this is a typical chart setup of mine. The training that you get will be very much in line with the techniques that I use day to day. There's nothing here that I share with you that I don't use. So this is a typical chart setup of mine. Watch list on the left hand side. At the moment we're looking at foreign exchange. Now notice it's a watch list. I don't limit myself to just the euro dollar or gold or the majors. It's an incorrect approach. What you want to be able to do is have everything. The approach that you want is to have everything on your watch list, including the indices, stocks, and commodities, which I don't have listed here. And when it comes to stocks, I look at UK stocks and US stocks. So you want to have a big watch list. You then want to go to where the money is. So first of all, you want to identify where the money is. At the moment, the money is not in foreign exchange. Foreign exchange is flat, and it's been flat for 2 years. The foreign exchange market is totally dead. And where are most private traders? In the foreign exchange market. And why are most private traders struggling? Because they're trading the foreign exchange market. The foreign exchange market is flat. Right now, the money is in UK stocks and US stocks. Commodities also is a flat market. So what you first want to be able to do is identify where the money is, which market. When you have identified the market, you then want to be able to identify which are the best instruments to trade. So let's say with currencies right now, if the money was in currencies, where would the money be? Well, maybe it's on the Aussie currencies. In fact, then everything else will be in consolidation. It might be on the euro currencies. Everything else will be in consolidation. So once you've identified the group, so let's say the Aussie dollar currencies, you're looking at the Aussie dollar, US dollar, Aussie CAD, Aussie Swiss, Aussie yen, Aussie Kiwi, Euro Aussie, pound Aussie dollar. So what you're looking at, 7, 8 currencies. Out of those 7 or 8 currencies, you then identify the best 2 or 3 that are worth trading. And those are the ones that you would trade and hold and compound for the next 7, 8, 9 months. Typically for foreign exchange, that's a good round of trend. Then the consolidation comes. You go back to your big watch list, foreign exchange, stocks, commodities, identify where the money is, build a watch list, build a portfolio, and round and round and round you go. This is how good trading is done. If you're just focusing on euro dollar all the time and day trading that to death, and then wondering why you aren't growing an account, wondering why you have winning days and then losing days, winning days, losing days, not really getting anywhere, it's because your foundation of being able to identify where the money is wrong. And people have to start understanding this, starting to accept this, that if you put your ego aside, which is where a lot of private traders derive their trading from, it starts from a point of ego. If you put that ego aside and put your hands up and say, well, actually, maybe I don't know what I'm doing. I need to start again, or I need to be able to fill in the gaps of what it is that's missing from my trading, or I may need to rethink my whole approach. You may find that you will start getting the results that you're looking for. Okay, so that's how you manage a watch list. Monthly time frame at the top has the key levels of resistance, which are the red lines, and support. Again, I don't draw these levels on. I have a tool that will automatically plot these support and resistance levels for me. Now, these are based on major pivots. So the tool has an algorithm that has been programmed into the tool, and that will then automatically detect and highlight these support and resistance levels for me. If you look at most private traders, what are they doing? They're drawing support and resistance by hand, manually. I think it's a ludicrous idea to be spending hours a day drawing support and resistance on the screen. I think it's absolutely ridiculous. We have a limited amount of time on this planet to be able to build a lifestyle, to be able to generate money, to be able to create a lifestyle of happiness through hard work and graft. The last thing you want to be doing is manually plotting support and resistance levels on the chart. It really, I do not understand why private traders want to use free software to plot support and resistance, to waste their precious time doing that, to then not grow an account. The correct approach is to have good software, to pay for it, and then to have good high-end tools that do the manual labor for you. So 95% of the work is done for you. And then the final execution of the trade, the risk management, the entry points, the stop losses, the compounding, the exit management, the actual decision of what you are trading, that should all be done by you, the trader. And with good weekend preparation, so my typical routine is an hour at the weekend, so 30 minutes to an hour at the weekend, where I prepare, do in-depth analysis, scan the market. I have software that does a lot for me. Because I spent an hour at the weekend preparing for the week ahead, Monday to Friday takes me no more than a minute to 20 minutes a day, depending on what the market is doing. Like say, for example, today, NFP, I managed all my trades yesterday. And as of today, I didn't even open up my computer until I did this webinar. Okay, so support and resistance on the monthly, weekly, the 200 simple moving average, and the dynamic trader proprietary trend filter. So you can see that we don't have standard candlesticks or red and green candlesticks. I've got a trend filter that sits over the top. As part of the training, you'll be given this trend filter and you'll be explained the logic behind it. I've got the exact same setup on the daily. So the 200 simple moving average and the trend filter. So what I'm looking for is a bias in price. In trading, nothing is guaranteed. This is something that a lot of private traders fail to understand. If you speak to a lot of private traders, they always say that I know what's going to happen next. It's ridiculous because that goes against every understanding of what the market is about. No one knows what the market's going to do next. Not even Warren Buffett. He said it himself. He doesn't know what the market's going to do next. He doesn't try and predict tops and bottoms. It's not something that Warren Buffett does, and he seems to have done pretty well from it by not trying to predict what the market does. So why would private traders try and approach the market as if they understand or can guess or can predict what the market is going to do next? It's absurd. What you want is an idea of probabilities to be able to create an environment where you have more chance of making money than losing money. It's all about probabilities. And of course, because you're trading on probabilities, there's always the chance of losses, which is why you always risk small. Your first position should always be a tester, 0.5%, 1%, no more than 2%. At a push, maybe 3%, nothing more than 3%. Test the waters. If that starts returning you a profit, start adding more positions, compounding. What most private traders will do is take 20%, whack, put it on a trade, and then try and make 20% back. If that's a losing trade, you're already 20% down. It's a ludicrous idea. So how do we create these high probability environments? Well, the 200 simple moving average is used to give us a bias in price action. The logic comes from before the internet, when old school traders used to draw charts by hand. So they were very selective with the information they put on their charts. So on the daily time frame, they used to draw the 200 simple moving average. Above, they used to go long. Below, they used to go short. They didn't go against the bias. As dynamic traders, we also use the 200 simple moving average on the weekly time frame. So what we're looking for is the weekly and the daily time frame to be mirroring each other. We want them to be doing exactly the same thing. So effectively, the way to look at it is that the weekly chart is big brother and the daily chart is little brother. So whatever the weekly is doing, we want the daily to be doing exactly the same. So if the weekly is below the 200, I want the trend filter to be red. And I want the same on the daily time frame. I want the daily, I want price to be below the daily 200 and the trend filter to be red. That is where we have alignment between the weekly and the daily, and when I would look for potential shorting opportunities. In a bullish market, so what would be in a bullish market right now? Well, nothing really in currency. So let's have a look at stocks. Excuse me. So if you have a look at stocks, so Marriott is a stock that I'm long on. You can see that it's above the weekly 200. The trend filter is green, and above the daily 200, and the trend filter is green. So you can see now that we have alignment in a bullish market between the weekly and the daily time frame. So this is how I use my charts. Monthly for the monthlies to tell me whether the market is in a trend or a consolidation and key levels of support or resistance. I then use the weekly and the daily to look for trend direction and alignment, and whether I look to go long or whether I look to go short. So looking at the Aussie dollar, US dollar, which is the currency started, we can see that this is a trend, a bearish trend. This is a consolidation. When the monthly is stating a consolidation, I'm not interested in trading this, so I stand aside. If you look at the euro dollar, here is a trend, which is when I last traded the euro dollar. Here is a consolidation. This is why I'm not interested in trading the euro dollar. If you look at the pound dollar, this is a trend, long-term bearish trend from 1.7 down to 1.2. It's a 5,000 pip drop. This is a consolidation. This is the state of the currency market at the moment. There aren't any clear identifiable trends. If you look at the US dollar, Canadian dollar, here is a trend, and here is a consolidation. It's very, very messy. It's choppy. If you look at it on the daily time frame, look how it whipsaws everywhere. This is not really an environment that you want to be trading in. Having said that, there are some currencies that are starting to look interesting, but not currencies that I am looking to trade until price clears certain levels. So if you look at the euro Aussie dollar, overall it's in an area of consolidation. But between the high and the low of the range, there's quite a bit of space. It's also above 1.50, which is a key level of resistance, now acting as support. And we've got plenty of space to the upside, which is 1.6, the round number. And then these levels here, 1.7. If it clears this level, look at the white space to the upside. The monthly will give me a really clear idea of risk to reward. Most people have a fixed risk to reward, 1-to-1, 1-to-2. It's a crazy idea because trading is, a lot of people understand the expression, the trend is your friend. So why would you want to set limits, 1-to-1, 1-to-2? What if the market continues to 1-to-10, 1-to-15, 1-to-20, and you're taking profit at 1-to-1, 1-to-2? It goes against, again, the very fabric of what good trading is. Cut your losers short, let your winners run. The issue is that most private traders are well informed. They know all the terms, but they don't know how to put it into practice. And this is where ego comes in. Now, if we look at the weekly, above the weekly 200, the trend filter is green. And if you look at the daily, above the daily 200, trend filter is green. Look at the trend that's in play from this point here. Move, pull back, move, pull back, move, pull back, move. Bit of a consolidation, move again. This is the kind of trend structure that we should be looking for as trend traders. This is a neat looking trend. Now, of course, in hindsight, I should have got in at this point. But if I compress the chart, at this point here, the market was in an area of consolidation and it's all very choppy. Plus, it's below the 200 simple moving average. So not tradable just as yet. However, post NFP, I may be looking to go long on a small pilot position. So price may come back to retest this 1.5 round number. And then the next breakout will be an opportunity where I may look to enter a position. You look at the pound Aussie dollar. Same thing. Here is a trend. Here is a consolidation. However, we're starting to see strength to the upside. And if you look at the clear space to the upside, pound Aussie dollar is looking interesting. It's still below the weekly 200. The trend filter is green. And it's above the daily 200. Trend filter is black. That's because it's pulled back. Now, if you look at where it pulled back to, if people start understanding support and resistance in terms of pivot support and resistance, if you look at where it pulled back to, it's pulled back to a previous pivot zone, which was resistance, is now acting as support. So by being able to understand key levels of support and resistance, you'll be able to, if you are in a trend, you'll be able to enter, you'll be able to hold your positions longer. You may be able to enter in on pullback. So if price pulls back to a key level of support or resistance, these are potential entry points. So definitely environments that are worth keeping an eye out on. Don't allow these pullbacks to phase you. Pullbacks are part and parcel of trading. Where everyone is selling, you should be looking to buy. Remember, this is a win-lose game. Where everyone is selling, you should be looking to buy. I'll give you a good example. Marriott. I entered Marriott for the first time at $90. I last traded Marriott on this bull run here back in 2014, 2015, got stopped out around here. So this is when price went from around $40 to around $70. $70, $75. So this is when I last traded Marriott. You can see since then it's been quite range bound. It's been very whipsaw. However, price has recently been in a bull run. As many of you probably know, the US stock market is rallying. So the first good entry point for me was when price pulled back to $90. This is where I entered. Now, if you look at it in terms of support and resistance, previous pivot resistance became support, $90 mark. We've had a bounce to the upside. And I've got multiple positions running along this trend. So Marriott is a stock that has performed very, very well for me. Another stock that is performing well for me is CNP. So if we look at CNP on the monthly time frame, we can see that it's in a run, a bull run. Look at the space to the upside. Plenty of white space ahead, so good risk to reward. Above the weekly 200, the trend filter is green. If you look at the weekly, it's been predominantly green since October of last year, telling us a bullish trend is in play. If you look at the daily, above the daily 200, trend filter is green. Now, I have multiple positions running along this trend. When price pulled back, you can see that it pulled back to, again, a previous resistance, acting as support, indecision. This is where I compounded again. You can see we've had another bull run up. Now, the market has broken and closed above this high point, a break and a close above this high point, and this is offered another entry. So lots of good moves taking place on stocks. TTWO. It's another stock that I've been long on for quite some time. You can see why. A nice bullish run to the upside. If you look at the weekly, above the weekly 200, trend filter is green. If you look at the daily, above the daily 200, trend filter is now green as well. I've been long on this since above $50. So around this point here, went into profit, went into this area of consolidation. Bigger the consolidation, bigger the breakout. Look how it's moved. Since that breakout from $60, it's now at $80. Found a bit of resistance, and it's now looking to move again. This is natural. This is not where I want to panic, close my positions. This is where I hold. This is where I allow the market to dictate what to do next. A breakout above this high point will mean a continuation, and this is when I can start looking to compound further. Okay, let's have a look at another stock that I'm in. NVIDIA. So NVIDIA, I've been long on since $40 going back to last year. And I'm still long on this, and it's now just short of $150. Now, often people say to me, well, it can't sustain any more highs. Okay, well, let's look at the stock of Amazon. If you look at the stock of Amazon, if you go back to 2010, Amazon was around 120. If you go back to 2012, it was around 220. If you go back to 2014, 2015, it was around $400. So now Amazon has touched $1,000. So in the space of 5 years, 6 years, 7 years, it's gone from around $50, $60, all the way to $1,000. How many times would people have said that this is not going to go any higher? It's not going to go any higher. So don't have an opinion. If you have an opinion, more often than not, you'll be wrong and the market will teach you a lesson. You're better off allowing the market to dictate when is the end of the trend. And for now, on NVIDIA, this is still going. If you look at the weekly, above the weekly 200, trend filter is predominantly green. A little bit of consolidation here, but it's gone again. And if you look at the daily, I entered when price broke and closed above $40 on a gap up. A gap is a strong signal of a continuation. We can see that it just shot through the roof, went all the way through to $120. Then price came back to retest the $100 zone. And this is where I then applied a bit of patience. My stop loss was around the $90 mark. This is where I had my stop loss. The reason for that is because from experience, I know that the $100 mark and this zonal area would act as a level of support and resistance. And you can see that's exactly what happened. Price acted as support. This resistance area acted as support. Gap up, it went again. So my stop loss never got triggered. My positions from $40 back in May of last year are still open, and these are now all in further compounded profit. What I'm looking for is price to clear $150. If it clears $150, then I'll look to get out. My stop loss is now in play. It's above the $100 mark, so I have good profit locked in. But ideally, I'm looking for this trend to continue. Okay, let's look at a couple of UK stocks that I'm in, just to give you an idea that same knowledge that I use for currencies and stocks can be transferable to UK stocks. Boohoo, online UK clothing company. I've been long on this since last year. I think it was above 60 pence where I got in. And you can see that this is shot through the roof. And again, it's at around £2.20 now. Weekly, trend filter is green. There is no 200 simple moving average because it's quite a new stock. And the daily, above the daily 200. And you can see as of today, this has continued going. So while most people think that a stock cannot continue any higher, price will tell you otherwise. Okay, another stock that I'm in, a UK stock, one that's just broken out and one that I'm looking to compound on potentially is ATST. So if you look at the monthly in a bullish run, it's around the £7 mark now, above the weekly 200. Trend filter is predominantly green, but turned a bit of black when gone through consolidation. And weekly, daily above the daily 200. I've been long on this since above £6. So when price broke above this high point last year, that's when I entered my long positions. Recently, it's been going through an area of consolidation. Now, if you look at this consolidation, it came into play March of last year. And if you have a look, what do we have? We've got an inverted head and shoulders pattern. There's your left shoulder, there's your head, there's your right shoulder. What we're looking for is a breakout to confirm that. So this hasn't been confirmed as yet. What we're looking for is a breakout. Chart patterns are confirmed on breakouts. So this is a potential inverted head and shoulders. So if price breaks and closes above this resistance, then that will be a strong sign of a continuation. Why? Because an inverted head and shoulders pattern is a continuation pattern. It will be above the round number £7, which means it will then look to move towards £8, £9, and then £10. So patience. Bigger the consolidation, bigger the breakout. Once the breakout happens, I'm looking for the next bull run to come into play like this. And we can see that this bull run went all the way from around £6 to £7. So if we can see another bull run from £7 to £8, £9, £10, that's what we're looking for. Okay, that is all I wanted to cover. How do we know where the money will be? Forecast, NFP forecast. NFP forecaster. I don't know what you want me to say, Mohammed. It doesn't matter. Go to Forex Factory. Forex Factory will tell you the forecast. I don't know what's going to happen regarding NFP. I don't know how it will impact the market. The more you try and understand fundamentals, the less you're going to get it right. I mean, there's been times where there's been a positive NFP and the market's gone up, and then the following month there'll be a positive NFP and the market's gone down. Why is that? Try and understand that. It doesn't it really doesn't matter to me what NFP comes out as, how it impacts the market. For me, it's just noise. It will get absorbed in the market and it will just continue. Look at the trends that I've shown you. Nvidia. So I've been long on Nvidia since May of last year. Okay, so that's over a year now. That's 12, and including today, that's 13 NFPs. If we count NFP per month, that's 13 NFPs that have come out. The stock's just gone through the roof. You look at Boohoo, you look at Marriott, you look at all of these stocks that I hold for months. NFP is coming out on a monthly basis. What does that tell you about how much impact it has on the market? Little to nothing. How do we know where the money will be? It's a good question. And the answer is knowledge, understanding how to break down the charts, having good software, understanding trending markets and consolidating markets. All of these questions you have to be able to understand. And where is the answer? The answer comes from training, guys. This isn't the kind of information that you're going to find free on the internet. And this is where people go wrong. When I started trading in 2007, I was a photographer. I was working full time, 16 hours a day. I was working weekends. I didn't have the time or the inclination to try and figure this out. My mentor, who taught me how to trade back in 2007, had his mentors. Look at Warren Buffett. He has a mentor. All the best people in the world, all the best traders, all the best people in any walks of life have mentors. You look at Andy Murray. He was struggling to win Wimbledon. As soon as he moved to Ivan Lendl, he won Wimbledon. You've got to look at how even the best have mentors. Michael Jordan, etc., etc. They all put their success down to having good mentors. That seems to not exist in the world of the private trader. What they do is they go online, download a bit of free software, go to a broker. Do you think a broker has your interests at heart? A broker doesn't care about how much money you make. A broker cares about spreads, and a broker cares about commissions. And a broker will get you to day trade, because the more you day trade, the more a broker makes. So why would any private trader think that a broker would have their best interests at heart? Doesn't make sense to me. So to be able to understand everything that I've gone through, you've got to have the right foundation from the beginning. The foundation is key. We still looking long if broke the high. Yes, of course. If something breaks a high, it's only going to go higher. If something breaks a low, it's only going to go lower. So look for breakouts. Look for breakouts in the direction of the trend. I think that's what you're asking. But an entry point, I've shown you entry points, right? An entry point is simple. Breakouts, pullbacks, these are entry points. But this is not the most important part of trading. The most important part of trading is the exit management. Knowing how to place your stop loss, knowing how to manage your risk, understanding levels. If I enter today, how far can price move? Where will it be next month or the month after, in 6 months' time? Understanding how far a stock or a currency can move is key. All of these need to be understood before you get into a trade. Most private traders get excited when they found an entry point. An entry point means little if you don't understand what comes next. So to answer your question, yes, a breakout is a breakout. It's an entry point. But what next? Where are you going to place your stop loss? How are you going to manage your risk? How far do you think it's going to go? How are you going to compound? How are you going to trade your stop loss so that you don't get stopped out too early? When are you going to look to tighten your stop loss if you get to a potential reversal point? How are you going to tighten your stop loss? These are questions that must be understood before you take a trade. What most people get caught up in is the technical analysis. And so because you can do a bit of technical analysis, you think that you're a trader. An analyst is an analyst. These people you see on television, Bloomberg, all of these channels, they're analysts. They're looking at a chart and they're telling you where it was last year and what could happen this week. That's analysis. They're analysts. They're not traders. A trader is someone who can take that analysis and then execute the right trades in the right market conditions. You don't want to be a one-trick pony. Most private traders have one approach. That's it. Look at what I've shared with you today. I've said to you, right, when it breaks out, that's what you want to be doing. When it pulls back, this is what you want to be doing. I've shared 2 techniques on how to get into a market and how to look to extract profit from the market. That's because I'm dynamic, hence the name of our company, which is Dynamic Trader. I'm dynamic. I look at the market, I let the market dictate, and I then use the many strategies that I have available to me to then extract profit. So do not mistake technical analysis for trading, and do not be a one-trick pony, and do not day trade. Do not allow other people to dictate how you approach the market. Do not allow that sort of empowerment in other people's hands. You have to take your own ability and understand that there's far more. This is far more sophisticated and far more intricate. It's simple, but it's far more sophisticated and far more intricate than most people give it credit for. They turn to this as a way for quick money and quick riches, and then they wonder why they never grow accounts. Wasting time, guys. Start understanding that this is better, that you guys are better than this current approach that most people have. Okay, are there any questions? Are there any final questions? I'm conscious of time. We've got about 5 minutes. Administrator, any other questions coming through? If you want to email me, Zaheer at zaheeranwari.com. That's my email address. I would have to... Time for short now. I don't know what you're talking about, Sofian. So it depends what you're talking about. It depends on what market you're looking at. If you're looking at the foreign exchange market and you want to short, then I don't know which currencies you're looking at. From what I understand about the foreign exchange market, you don't want to be shorting anything just as yet, and you don't want to be going long. This is just a need to trade. Most people label themselves as traders and then want to just trade every day. People are too quick to give themselves that term, a trader. What you want to be able to understand is what lane you're in. When you know what lane you're in, you'll then be able to give yourself the correct title. So short time for short right now. If you're talking about stocks, definitely not. If you're talking about currencies, then I would also say no. Okay, so let's end the webinar here. I'm just going to go back to share entire screen just so that I can send you to some of the pages that I haven't sent you to. So if you want to register for the free seminar here in the UK, please go to zaheer.live /free-seminar. If you want to register for the live training, which is on the 16th of June, this needs to be changed. £297 for 3 months of training. Then please go to zaheer.live /seminar. If you want to do the same training online, if you're abroad and you're keen to join our community, get access to everything that I've talked about: breakout strategies, pullback strategies, training in currencies, stocks, watch lists, software, weekly videos, everything. If you want access to that, zaheer.live /apprentice. £297, guys. It's an entry-level course. Beyond that, there's one-to-one training, but it's an excellent place to start in terms of getting into trend trading and being part of the right community, the right environment for you. Beyond that, please check out my blog, so medium.com /@Zaheer Anwari. I basically tweet and blog about everything that I'm interested in. So a lot of the stocks that I mentioned today, there's a blog on there. And I update this blog pretty much every day. LinkedIn, guys, if you're on LinkedIn, please feel free to search for me and add me. And I am on Facebook as well. You can search for me via my name. Also, you can search for my Facebook page, which is City Trader Lifestyle or a private trader in London. Have a search for that. Yeah, so that's everything. British pound construction result turn out to be better than forecast. Why is it not impacting the market? Because it's a smokescreen, guys. Fundamentals are a smokescreen. The more you get caught up reading all of this, trying to figure out the market, the more you're going to miss out on opportunities elsewhere. Okay? Don't let the news, guys, come on, let's be real. The news is a smokescreen. It's designed to keep us in fear. It's designed to stagnate us. That is what news is about. Whenever you ever listen to a half hour of news and it's just full of positivity, full of all the amazing things that can happen in the world. No, it's full of war. It's full of the market's going to crash. It's full of political issues. It's full of protests. It's full of people's death. It's designed to keep us in a negative state of mind, and it's designed to keep us in fear. And we then try and translate that into the market. What you want to be able to do is separate the two. Watch the news. You must watch the news. It's good to be informed. And having said that, I'd say make sure you watch the right news channels. I wouldn't always just watch the one news channel. Watch various news channels so you get a broad spectrum of various ideas of what's going on. Don't allow just one news channel to dictate what's happening. But you want to be able to separate that from the trader in you. The trader, the private trader, is different to the fundamentals that are being pumped out at us every single day. Now, the other point to note is this: we are private traders. That means we're outside the realms of the institutions. Institutions pay a lot of money to get news early, a lot of money. So by the time we hear the news, it's actually old and it's actually been impacted into the market. It's already been factored into the market. So news is history by the time we hear it. Another reason why you don't want to focus on the fundamentals and you want to focus on the technicals. I hope that answers your question. Look, don't be offended by anything that I'm saying. Don't take anything that I'm saying personal. I'm straight talking, I'm direct, and I really want you guys to understand that as private traders, we are pretty much in a little battle here between all the nonsense that's pumped out on the internet and trying to find the right path for you as human beings in terms of the time that you have on this planet, in terms of the hours that you put into your 9 to 5, in terms of providing for your family, your friends, your children. People are taking those dreams and those goals away from you, and there's a reason for that, because the more you chase it, the more you'll never have it, and the more you try and chase it, the more you'll be stuck in a 9 to 5 trying to feed that dream. So you have to be smart from detaching what your goals and the approach that you want to have to the nonsense and the fundamentals and all the marketing that is pumped out to private traders on a daily basis in order to achieve your goals through trading. If I can achieve what I've achieved, which is I've gone from one trading account in 2007 to 11, 12 different trading accounts, all with significant sums of money in there. I trade full time. So I trade an hour a day. I take an hour at the weekend to prepare. Monday to Friday takes me no more than a few minutes a day. The rest of the day, I'm totally free to do whatever I want to do. Now, I may not have the account size of Warren Buffett, but it doesn't matter because I've got enough money coming through that funds a lifestyle. That's retired my dad. That helps me have the house and the car that I have. It took me 4 years to achieve full-time status. I started in 2007. I finished in 2011. It took me. I went full-time rather in 2011. It took me 4 years to achieve full-time status. 4 years. That's working 7 days a week, saving, grafting as much money as I could, and then trend trading and growing that. Most people want to achieve that in weeks and months. Got to be realistic. Good. Okay. And yeah, that's fine. 8V173133. I'm sorry, you're just a code. You're welcome. The key now is to do the right things. What is the right thing to do next? The right thing to do next is, because you're at a very interesting position. This can either go very right for you, or it can go very wrong for you if you're new to the market. If it goes very wrong, you're going to be no different to the 95% that fail. And you're already starting to go down that route. What are you doing? You're attending free webinars. Now it's from this point where you have to be smart and think, right, what is the next stage that I need to take? I need to take this as I need to treat trading as a business. That means I need to invest into it. What do I need? Well, I need to understand what I'm doing. I need software. I need market data. I need the right funds in an account. You need the right foundation to start with. If you don't get that foundation correct, you will fail, because there's nothing different about you compared to all the other private traders out there that are going to fail. There's nothing special about you. There's nothing special about any of us. We're just human beings on this earth. So if you get your foundation wrong, you will fail. If you get your foundation correct, then you'll be able to do something that most private traders fail, which is build a career on trading. So you have to make the right choices going forward. Okay, I don't like the news. That's fine. That's I tend to agree, but it's always good to know what's happening out there. Just always have an open eye in terms of why are they telling you it? What are they showing you? Just be open to what they aren't telling you. Okay, yeah. So 8V173. My email is Zaheer@ZaheerAnwari.com. I expect emails from a few of you guys at the end of this webinar to be able to take things to the next stage. Okay, let's end the webinar here. Have a good weekend ahead. Administrator, thank you. And I will see you all on the next webinar. Take care. Bye-bye.